In a significant development for the cryptocurrency landscape, the long-standing legal battle between Ripple Labs and the U.S. Securities and Exchange Commission (SEC) has reached a conclusion that could reshape the industry. After 4 arduous years, Ripple announced that the SEC has officially dropped its lawsuit, a move that not only marks a pivotal victory for the firm but also signals a potential shift in regulatory attitudes towards cryptocurrencies in the United States. The SEC's lawsuit, initiated on the last day of former Chair Jay Clayton's tenure, accused Ripple of raising $1.3 billion through the sale of its XRP token without proper registration as a security. This case not only challenged Ripple's operations but also served as a broader indicator of the regulatory climate surrounding digital assets. CEO Brad Garlinghouse expressed his relief and triumph, stating, "Ripple stands alone as the company that fought back and won on essential legal questions, throwing a major wrench into the SEC's plans to destroy crypto in the U.S. through enforcement." Following the announcement, XRP experienced an impressive surge, rising approximately 11% as investors reacted positively to the news. This victory comes at a time when the SEC has faced increasing scrutiny regarding its approach to cryptocurrency regulation, particularly under the leadership of current chair Gary Gensler, whose strategy has been perceived as aggressive and antagonistic towards the crypto industry. Ripple's legal battle has cost the company around $150 million, but it has also catalyzed a shift in the industry's dynamics. A federal judge's ruling in July 2023, which stated that XRP is not necessarily a security on its face, significantly undermined the SEC's position and provided a legal foundation for Ripple's defense. The implications of Ripple's win extend beyond the company itself. It has instigated a wave of optimism within the crypto sector, suggesting that the tide may be turning in favor of cryptocurrency firms. The SEC's recent actions, including the dismissal of lawsuits against other major players like Coinbase and Kraken, further indicate a potential softening of its stance. Hester Peirce, the SEC commissioner now leading a newly established crypto task force, recently emphasized a shift towards regulatory engagement rather than enforcement, aiming to provide clearer guidance for the industry. At the same time, President Donald Trump's administration is making strides to align itself with the crypto community that largely supported his campaign. Following a keynote address at the Bitcoin conference, Trump has articulated plans to position the U.S. as a leader in the global cryptocurrency space. This alignment has led to legislative initiatives and executive orders aimed at fostering a more conducive environment for digital assets. As the SEC reshapes its approach, it has also rescinded Staff Accounting Bulletin 121, a rule that had posed significant barriers to institutional adoption of cryptocurrencies by requiring banks to classify crypto assets as liabilities. This, coupled with the recent dismissals of numerous lawsuits against key players in the crypto market, suggests that the landscape is becoming more favorable for innovation and investment. Despite the victory, Ripple's chief legal officer Stuart Alderete cautioned that while this chapter may be closed, the fight for clear and fair crypto regulation is far from over. While this chapter is closed, the fight for clear, fair, and transparent crypto regulation continues, he stated, highlighting the ongoing challenges that the industry faces in navigating regulatory waters. Looking ahead, the future of cryptocurrency regulation in the U.S. appears poised for transformation. With Ripple's victory serving as a catalyst, there is potential for a more balanced approach that could foster growth and innovation while addressing regulatory concerns. As the SEC continues to re-evaluate its strategies, market participants will be closely watching for further developments that could impact the trajectory of the crypto industry in the months and years to come. In a rapidly evolving landscape of cryptocurrencies, the recent announcements from key players in the field are poised to reshape the dynamics of digital asset trading and mining. The intersection of political decisions, regulatory frameworks, and innovative trading platforms is creating a multifaceted environment that could significantly impact both investors and the broader market. The United States is witnessing a monumental shift under President Donald Trump's renewed administration, particularly concerning cryptocurrency policies. After his re-election, Trump wasted no time in establishing a pro-crypto agenda, which includes a strategic push to integrate Bitcoin and other digital assets into the American financial system. One notable action was the creation of the President's Working Group on Digital Assets, an executive advisory council dedicated to exploring regulatory reforms for cryptocurrencies. This movement is expected to set a precedent that could ripple through international markets. By embracing digital assets, we can foster innovation and position the United States as a leader in the global economy, Trump stated during the announcement of these initiatives. This sentiment reflects not only a shift in regulatory approach but also a broader acceptance of cryptocurrencies as a legitimate financial medium. Furthermore, Trump's proposal for a Bitcoin strategic reserve aims to bolster the U.S. economy while potentially stabilizing the volatile cryptocurrency market. Meanwhile, on the other side of the globe, Pakistan's Crypto Council is advocating for a transformative approach to cryptocurrency mining. At their inaugural meeting, the council proposed harnessing the country's excess energy resources for Bitcoin mining. This initiative, led by CEO Bilal bin Saqib, marks a significant departure from Pakistan's previous stance, which largely shunned cryptocurrencies due to regulatory fears surrounding anti-money laundering practices. The shift occurred following a policy overhaul that coincided with the U.S. elections, indicating a global trend towards crypto acceptance. "This is the beginning of a new digital chapter for our economy," said Senator Mohammad Aurangzeb, emphasizing the potential for cryptocurrencies to attract foreign investment and empower the youth. The proposed framework aims to position Pakistan as a competitive player in the global crypto market, leveraging its unique resources for sustainable mining practices. As these developments unfold, trading platforms are also adapting to the changing landscape. Bexback, a burgeoning crypto futures exchange, recently announced the launch of its service, offering 100x leverage without the need for Know Your Customer (KYC) protocols. Designed for traders seeking maximum flexibility, this platform allows users to engage in high-stakes trading with minimal barriers to entry. The attractiveness of such offerings is underscored by the promise of a 100% first-time deposit bonus and a $50 welcome reward for new users. Traders can now maximize their potential without unnecessary restrictions, Bexback representatives stated, highlighting the platform's commitment to user-friendly and accessible trading experiences. This model not only caters to seasoned traders but also invites newcomers into the crypto space, potentially increasing overall market participation. In addition to these strategic moves and innovations, the energy consumption associated with Bitcoin mining has drawn scrutiny, raising questions about sustainability. The ongoing debate underscores the need for solutions that balance economic growth with environmental responsibility. As countries like Pakistan explore energy-efficient mining practices, the potential for sustainable innovations could present new opportunities within the cryptocurrency sector. Looking ahead, these developments signal a crucial period for cryptocurrencies. As regulatory frameworks evolve and innovative platforms emerge, traders and investors alike will need to stay informed and agile. The interplay between political decisions, technological advancements, and market dynamics will undoubtedly shape the future of digital assets, potentially leading to unprecedented growth and transformation in the cryptocurrency landscape. In a bold move that could shake the cryptocurrency landscape, President Donald Trump has announced plans for a U.S. government crypto reserve which will include Bitcoin and 4 other major cryptocurrencies. This newly unveiled strategic Bitcoin reserve aims to bolster the nation's digital asset portfolio, igniting excitement among crypto investors and analysts alike. With Bitcoin's current market cap hovering around $1.7 trillion, the implications of this announcement are profound, potentially influencing market dynamics for years to come. The creation of the U.S. digital asset stockpile signals a significant shift in governmental attitudes toward cryptocurrency. The reserve will comprise not only Bitcoin but also Ethereum, XRP, Solana, and Cardano, marking a strategic diversification into the burgeoning digital currency ecosystem. The fact that the U.S. is stockpiling crypto is exciting news for crypto investors, remarked Lyle Daly, A financial analyst adding that the government's involvement could lend greater legitimacy to the sector. Bitcoin remains the most established cryptocurrency, often referred to as digital gold due to its capped supply of 21 million coins, adding an element of scarcity. Over the past 3 years, Bitcoin's price has surged by 98%, outpacing the S&P 500's return of 27%. Yet it faces challenges as a transactional medium, with processing times and fees making it less practical for everyday use. Nevertheless, its position as a store of value remains strong, particularly as investors seek hedges against inflation. Ethereum, while historically significant for its role in enabling smart contracts and decentralized applications, has seen mixed performance recently. Despite being the second largest cryptocurrency by market cap, Ethereum has lost approximately 34% of its value over the last 3 years, prompting questions about its long-term viability. The average transaction fee on Ethereum stands at 19 cents, a stark contrast to Solana's minimal fee of $0.00025, raising concerns about Ethereum's competitiveness in the rapidly evolving blockchain landscape. XRP, the native token of the Ripple network, offers a compelling use case as a cross-border payment solution, significantly reducing transfer times and costs compared to traditional banking systems. Following the recent dismissal of a lawsuit from the Securities and Exchange Commission, XRP has shown resilience, boasting a 187% increase in value over the past 3 years. Its practical application in international finance positions it as a strong candidate for inclusion in a diversified crypto portfolio. Solana, a rising competitor to Ethereum, has garnered attention for its impressive processing capabilities and low transaction costs, with speeds exceeding 4,000 transactions per second. Solana presents a robust option for developers and investors alike. Despite being a high-risk investment, its 39% growth over the last 3 years speaks to its potential in the cryptocurrency market. Conversely, Cardano has struggled to gain traction, with its price declining by 18% over the past 3 years. While it has introduced innovative proof-of-stake mechanisms, its slow development pace raises concerns about its ability to compete effectively in the crowded crypto space. While the U.S. government's endorsement of these cryptocurrencies could signal a bright future for the market, investors are advised to exercise caution. The volatile nature of cryptocurrency means that not all assets included in the reserve are guaranteed to yield positive returns. Financial experts recommend that investors limit their exposure to cryptocurrencies to no more than 5 to 10% of their overall portfolio, prioritizing stability through traditional assets. In conclusion, the establishment of a U.S. crypto reserve could reshape the investment landscape, attracting institutional interest and potentially stabilizing the market amidst ongoing volatility. As President Trump lays the groundwork for this initiative, the coming months will be critical in determining how these digital assets perform under governmental stewardship. The crypto community will be watching closely, as this unprecedented move may herald a new era of acceptance and integration for cryptocurrencies in mainstream finance. In a bold move that has sent ripples through the cryptocurrency community, U.S. President Donald Trump recently unveiled plans for the strategic Bitcoin reserve and the United States digital asset stockpile. This initiative aims to position the U.S. as a significant player in the digital currency space by accumulating Bitcoin alongside 4 other prominent cryptocurrencies: Ethereum, XRP, Solana, and Cardano. As interest in these digital assets surges, investors are left wondering whether these cryptocurrencies are sound investment choices. At the forefront of this initiative is Bitcoin, the original and most established cryptocurrency. With a staggering market cap of $1.7 trillion, Bitcoin stands as a dominant force in the crypto landscape, surpassing the combined value of all other cryptocurrencies. Over the past 3 years, Bitcoin's price has surged by 98%, vastly outperforming traditional equities such as the S&P 500, which saw a mere 27% return in the same period. Despite its initial purpose as a decentralized currency, Bitcoin has increasingly been viewed as a digital gold valued for its capped supply of 21 million coins, making it an attractive hedge against inflation. However, Bitcoin's functionality as a payment method has faced criticism due to slow transaction times and high fees. Processing can take anywhere from 10 minutes to over an hour, with transaction fees averaging around $1. This has led to a growing recognition of Bitcoin's role as a store of value rather than a practical currency for everyday transactions. Ethereum follows as the second largest cryptocurrency by market cap, distinguished by its innovative smart contract technology. These self-executing contracts enable developers to build decentralized applications (dApps) on Ethereum's blockchain, facilitating a diverse range of services from decentralized finance DeFi to blockchain gaming. Currently, Ethereum accounts for $46 billion locked in DeFi applications, underscoring its market leadership. Yet Ethereum has faced challenges, including a 34% decline in value over the past 3 years and higher transaction fees, averaging 19 cents compared to just $0.00025 for Solana. Investors may want to approach Ethereum with caution as it seeks to regain momentum. XRP, the native cryptocurrency of Ripple, is touted as a solution for cross-border payments, offering a faster and cheaper alternative to the traditional SWIFT system, which can take days and incur hefty fees. While XRP's potential is significant, ongoing legal challenges have raised concerns over its regulatory status, complicating its investment appeal. Solana and Cardano, the other two cryptocurrencies included in Trump's digital asset stockpile, have also gained traction in the market. Solana is recognized for its high transaction speeds and low costs, making it an attractive option for developers and users alike. Meanwhile, Cardano offers a unique proof-of-stake consensus mechanism aiming for scalability and sustainability in blockchain technology. Both cryptocurrencies have the potential for growth, but investors should consider the volatility and risks inherent in the crypto market. The announcement of the U.S. digital asset stockpile has ignited excitement among crypto enthusiasts, particularly as Trump emphasizes a vision of making the U.S. the Bitcoin superpower. In a recent address, Trump stated, "You will unleash an explosion of economic growth," hinting at the transformative potential of cryptocurrencies in the American economy. White House officials have suggested that the U.S. could even leverage its gold reserves to facilitate Bitcoin purchases, a strategy that could significantly influence market dynamics. As the cryptocurrency landscape continues to evolve, investors are advised to approach these assets with a discerning eye. While the backing of the U.S. government could bolster the legitimacy of these cryptocurrencies, the inherent risks and market volatility remain. The future of digital currencies, especially in the context of national reserves, promises to be a fascinating journey filled with opportunities and challenges. As developments unfold, stakeholders in the crypto space will be keenly watching how these policies and market sentiments shape the future of digital assets. In the ever-evolving landscape of cryptocurrency, Solana has emerged as a formidable player, particularly in the realm of memecoins. However, recent developments suggest that the excitement surrounding this blockchain may be tempered by concerns over insider trading, manipulation, and a growing sense of exclusivity within its memecoin community. As the market grapples with these issues, observers are left questioning the sustainability of Solana's rapid ascent. The memecoin phenomenon on Solana has taken on a life of its own, characterized by volatility and speculative trading. Initially, the memecoin craze appeared organic, drawing attention for its humorous nods to internet culture. However, as the market matured, it became clear that a network of insiders was beginning to dominate the space. High-profile endorsements from figures such as Donald Trump and Argentine President Javier Milei have only amplified the allure of Solana's memecoins, which now represent a multi-billion-dollar market segment. At the heart of the issue lies the stark contrast between the original ethos of memecoins and the current market dynamics. Jordi Alexander, founder of digital asset trading firm Selini Capital, remarked memecoin launches were being promoted as an antithesis to the utility coins, where VC insiders were able to invest at 100 times lower valuations and sell to retail after launch. In truth, memecoin launches often have as much, if not more, of an insider advantage.
This sentiment reflects a growing frustration among retail investors who feel sidelined as the market becomes increasingly opaque.
Despite these challenges, Solana has garnered significant institutional interest, underscored by Fidelity Investments' recent registration of the Fidelity Solana Fund in Delaware. This move signals Fidelity's intentions to launch a Solana exchange-traded fund ETF, a product that could simplify access for investors and potentially drive demand for the cryptocurrency. The proposed ETF would enable investors to hold actual SOL tokens, contrasting with futures-based ETFs that have struggled to track asset prices accurately. If successful, the ETF could catalyze a surge in Solana's market price, pushing it towards the coveted $200 mark. However, the path to regulatory approval remains fraught with uncertainty. The U.S. Securities and Exchange Commission (SEC) has historically been cautious in approving ETFs for cryptocurrencies beyond Bitcoin, and many are watching closely to see how the regulatory landscape evolves. Fidelity's initiative highlights the increasing appetite from both retail and institutional investors for diversified cryptocurrency portfolios. Yet it also raises questions about the long-term viability of Solana amid its ongoing internal struggles. Moreover, the recent surge of Orca, a Solana-based cryptocurrency that soared 270% following its listing on Upbit, underscores the unpredictable nature of the market. Such dramatic price movements can attract both seasoned investors and newcomers, but they also carry significant risks, particularly for those who may not fully understand the underlying mechanics of the memecoin ecosystem. As Solana navigates these complexities, the future of its memecoin market remains uncertain. The interplay between institutional interest, regulatory scrutiny, and insider trading practices will likely shape the narrative going forward. For now, while Solana continues to attract attention as a leading blockchain platform, it faces the dual challenge of maintaining its growth trajectory while ensuring a fair and transparent marketplace for all investors. As the cryptocurrency landscape continues to evolve, it will be crucial for stakeholders to foster an environment that prioritizes integrity and inclusivity, paving the way for sustainable growth in this dynamic sector.